Welcome students, welcome to lecture number 33 where we will be continuing with module number 5, that is deductions under subject direct taxation. Under this module, as we know that we have to see different deductions under section ETC to ATU and how to compute the tax liability of an individual by considering the 5 heads of income and the deductions, and set off and carry forward you just have theory part. So in our previous two lectures, that is lecture number 31 and 32, we have seen certain deductions under section 80C, certain deductions under section 80D, and certain deductions under section 80G. So today, again, we will be continuing with permissible deductions under section 80C to ATU. So till we complete this module, I'll be revising this slide again and again, how to compute the total taxable income of an SSE. What you have to do is consider the income from all the 5 heads, that is income from salary, house property, profits and gains from business and profession, capital gains, other sources. When you add the income from all the 5 heads, you get gross total income. From that gross total income, when you deduct the deduction which is permissible from section 80C to ATU, you get total taxable income, and on this total taxable income you are liable to calculate the tax. So tax is never calculated on the gross total income, it is always calculated on total taxable income. So already in our lecture number 31 and 32, we have seen certain deductions, that is from ATC to ATG. We have completed partially ATG. So let us quickly revise the sections that we have already covered before starting with the new deductions. So under ATC, we saw there were 22 certain investments, that when an individual or HUF is making the investments in 22 specified categories, the deduction is subject to maximum of 1,50,000. Under 80CCC, we have seen that when any individual is contributing it to certain pension funds, but these pension funds are being set up by LIC of India, or it is a plan of LIC of India, then you get a deduction under section 80CCC, and the maximum amount of deposit that you can do under this section is 1,50,000. Moving ahead to 80CCD. 80CCD is nothing but it is where an individual, either he is employed by the government or any other employer, or he can be any other individual SSE who is contributing to the pension scheme of central government. Then the deduction is allowable, maybe 10% of salary or 20% of gross total income, as the case may be. Okay, now 80CCE says us that the maximum deduction after taking a total of 80C, 80CCC and 80CCD should not exceed 1,50,000. Next, we have seen 80CCG. 80CCG is when an investment is made by an individual in Rajiv Gandhi equity savings schemes. Then you get a deduction under section 80CCG. Now let us see what was 80D. 80D is nothing but, we know that when any individual or HUF is contributing towards the medical insurance premium for himself, his spouse and children, he's going to get a maximum deduction of 25,000, including himself, spouse and children. Suppose he's taking for his parents and his parents are a senior citizen, then the amount of deduction will be 50,000. So this is for the medical insurance premium. Also, if is contributing to central government health scheme or any other health scheme which is notified by central government. 80DD. DD stands for dependent disability. So when any resident individual or HUF is making an amount, incurring an amount for the maintenance of the medical treatment of dependent disabled, then he's going to get a flat deduction of 75,000, and in case of severe disability the deduction is 1,25,000. And 80DDB, 80 DDB, we saw that if any individual or HUF is contributing, if he's paying an amount, if the payment is made by him for medical treatment of specified diseases or ailments, then he's going to get a deduction of 40,000. And if the person who is to whom the contribution is made is a senior citizen, then he's going to get a deduction of 1 lakh rupees. Then we saw section 80E. This deduction is given when an individual is making a payment of interest on loan taken for higher education. Okay, and 80EE is a deduction that is given only to an individual who is making a payment of interest on the loan that he's borrowing from any bank or financial institution for acquiring a residential house property. Next, we saw 80G. So 80G we saw partially. So today we will be seeing the deductions from section 80G to 80U. Okay, can everyone see the this part of the screen? Yes, students?
Yes, ma'am.
Okay, now let us start with section 80G. Yesterday I had done it partially, but let me just continue with it. 80G deduction is given to any SSC, okay, when he is making some contribution, some donation to certain funds, charitable institution. So under 80G is divided into 4 categories. First category, we saw the donation, where if he's making to this respective funds, he's going to get 100% deduction of whatever amount he's donating, irrespective of any limit. So first category was 100% deduction without any qualifying limit. Next, we saw donations qualifying for 50% deduction without any qualifying limit. So if an SSC is contributing to any of these 4 funds, trust or foundation, he is going to get the deduction of only 50% of what amount he is contributing, but without seeing any limit. Then we saw third category is donation qualifying for 100% deduction, but subject to some limit. And fourth category we saw is donations qualifying for 50% deduction subject to some limit. So let me first help you all remember this. How are you going to remember what is going to fall under 50% deduction without any qualifying limit? So 50% deduction without any limit, only 4 things are covered. So you can say Nehruji's family is covered under 50% deduction without any qualifying limit. So you have Jawaharlal Nehru, Prime Minister's Drought Relief Fund, Indira Gandhi, Rajiv Gandhi. Just remember this. Indira Gandhi, we know she was a Prime Minister. So just remember Nehru's family, that is Jawaharlal Nehru, Prime Minister, Indira Gandhi was the Prime Minister, and Rajiv Gandhi. So these 4 are covered in 50% deduction without seeing any limit. Next, when we say 100% deduction with seeing the limit, then you have to just see 2 things: family planning and Indian Olympic. So just remember, if it is a family planning and if it is any donation is made to Indian Olympic, if these 2 words come in the problem, then you have to know that it is 100% deduction but with some limit. So family planning and Olympic is 100% deduction with some limit. And when it comes to 50% deduction without, subject to qualifying limit, so you just remember charitable institution, okay, for charitable purpose, if any fund is created, or for housing accommodation for minority section, and for temples, mosque or gurudwara. So when any donation is made for charitable purpose, number 1, number 2 also for charitable purpose, number 3 housing accommodation, minority community or temple, mosque, gurudwara, then you have to remember that it comes under 50% deduction category but with a qualifying limit. And rest, if anything else is given, any else donation donation is mentioned in the problem, then you have to put it in the first category, that is nothing but donation qualifying for 100% deduction without any qualifying limit. Usually the frequently asked funds are the National Defense Fund, Prime Minister's National Relief Fund, Prime Minister's Earthquake Fund, the National Children's Fund. Okay, and now newly due to corona they had created PM Care Fund, so that is newly been added this year, that is the Prime Minister Citizens Assistance and Relief in Emergency Situation Funds. So if anyone is contributing to PM Care Fund, he will get a deduction under section 80G, 100% deduction without any qualifying limit. So these were all the deductions. Okay, now when I say qualifying limit, this is applicable only to those contributions or donations that you're making in category 3 and category 4. Category 3 is where you're going to get 100% deduction with qualifying limit. In that you have family planning and Olympic. And category 4 is where you're going to get 50% deduction with subject to a qualifying limit, where you have charitable purposes, any contribution that is donation that is made, housing accommodation, minority, Gurudwara, mosque and notified temples. Now, so qualifying limit is only applicable to these two categories, category number 3 and 4. Now, what is the qualifying limit? Whatever amount you're contributing in the category 3 and category 4, that should be limited to 10% of adjusted total income. Remember students, whatever contributions you're making in category 3 and 4, that should be within the limit of 10% of adjusted total income. Now when gross total income, now when I say adjusted gross total income, you all should know what is the meaning of that. See students, you all know what is gross total income. Gross total income is nothing but when you take the income, add the income from all the 5 heads, you get gross total income, correct? Now what is the meaning of adjusted gross total income? Adjusted gross total income means from the gross total income, you will minus the deductions from ATC to ATU, exception the deduction under this section. Matlab, exception the deduction under section 80G. Leaving the deduction under 80G from the gross total income, when you minus the deductions, you will get adjusted gross total income. You have to take 10% of adjusted gross total income. That will be the limit up to which you can claim deduction under section 80G for category 3 and category 4. So suppose if the adjusted total income is 50,000, okay, adjusted gross total income is suppose 5 lakh, you're going to take 10% of that, which is 50,000. Now in category 3, you have made a donation of suppose 20,000. So 50,000 is the limit. 20 first you're going to use that 50,000 limit for category 3, that is 100% deduction, and then category 4, that is 50% deduction. So for 50% deduction, you are having a limit of 30,000. And suppose you have made a contribution of 40,000, you have only 30,000 limit, so you can claim deduction only 50% of 30,000. This you will better understand when we solve the problems. So just remember, qualifying limit is applicable to only those funds that are falling under category 3 and category 4, and the qualifying limit is nothing but 10% of adjusted gross total income. What is adjusted gross total income? The total of all the 5 heads of income. You get the gross total income. You less the deductions from section 80C to 80U, exception the deduction under this section, that is 80G. You get adjusted gross total income. You have to take 10% of that. Whatever amount you get, that is an amount up to which you can claim deduction under both the categories. So first you have to claim the deduction under category which is falling 100% deduction, that is category 3, and thereafter 50% deduction, that is category 4. So the donation qualifying for 100% deduction would be first adjusted from the permissible deduction, and thereafter 50% of the balance would be allowed. So let us just further see. Still Steps for computation of qualifying limit. This I've already explained, but let me just go through it. Compute adjusted total income. So how to compute adjusted total income? The gross total income, when I say GTI, it is nothing but gross total income. The gross total income is reduced by the following: deductions under chapter 6A, exception under ATG, short-term capital gain, you have to deduct long-term capital gain, and any income on which income tax is not payable, that has to be deducted. The balance is the adjusted total income. Step number 2, you have to calculate 10% of adjusted total income. That becomes your qualifying limit. Step number 3, calculate the actual donation which is subject to qualifying limit. That is from category 3 and category 4. You have to calculate what is the actual donation made. Then step number 4 will be whatever is the actual donation made or the 10% of adjusted total income, whichever is lower, that is going to be the donation that you can claim under section 80G. So always remember that first you have to adjust that maximum deduction from 100% deduction category, that is category 3, and balance you have to take 50%, which is falling under 50% category. Next, other points that we need to consider is where an SSE has claimed and has been allowed any deduction under this section in respect of any amount of donation, the same will not qualify for deduction under any other provisions of the Act for the same year or any assessment year. So suppose if an SSE has claimed deduction under 80G, the same amount of deduction he cannot claim under any other section. When donation is made in kind, it will not qualify for deduction. So if you're making donation otherwise than in kind, like suppose if you're making donation in kind, like you're giving some clothes, some books, that will not qualify for deduction because it is given in kind. So to qualify for for deduction under this section, the donation should be in any mode other than kind. No donation is allowed in respect of the donation of any sum exceeding 2000 unless such sum is paid by any mode other than cash. So always remember, up to 2000 donation you can make in cash, but if the donation amount in cash is exceeding 2000, you will not get a deduction under this section. So remember, only up to 2000 you can make a donation in cash. Rest all donation should be made in any mode other than cash, any electronic mode. Okay, so the deduction under ATG can be claimed whether it has any nexus with the business of the SSE or not. So even the donation is not related to the business of the SSE. He's just making out of his personal thing. Still, he will get a deduction under section 80G. So these were the points that we need to remember. So students, have you all understood section 80G? If yes, we will see a problem on this section. Students, have you all understood section 80G? Yes, students?
Yes, ma'am.
Students, are you all there?
Yes, ma'am.
Yes, ma'am.
Yes.
Okay. So let us see the problem number 8. Mr. Shiva, aged 58 years, has a gross total income of 7,75,000. So gross total income is nothing but total of all the 5 heads, comprising of income from salary and house property. So from the 5 heads only he is having an income from only 2 heads, that is salary and house property. He has he has made the following payments and investments. So now you all are supposed to tell me, students, under which section he is going to get a deduction. Okay, premium paid to ensure the life of his major daughter. Policy taken on 1/4/2017, assured value 1,80,000. He's paid a premium of 20,000. So tell me, students, under which section he's going to get deduction for this premium paid on the life insurance of daughter?
83, ma'am. 83.
Which section?
Ma'am, 80C.
Very good.
83.
80C, when it is life insurance, 50% premium paid on the life insurance is going to get under section 80C. Now, what is the amount of deduction he's going to get on the amount of premium paid, but subject to 10% of the
10%.
10%. So 1,80,000 into 10%. 1,80,000 into 10% is 18,000. But he's paying a premium of 20,000. So what is the amount of deduction he'll get? 18,000 or 20,000?
18,000.
18,000, ma'am.
Very good. Next is medical insurance premium paid for self 12,000 and for spouse 14,000. Now medical insurance premium, under which section is this particular deduction given?
Ma'am, 80D.
Ma'am, 80.
Very good, very good. Now he is only 58 years of age, means he is not a senior citizen. Then what is the limit for the deduction? See,
Ma'am,
now 12,000
25,000.
plus.
Ma'am, 50,000.
Very good, students. 12,000 plus 14,000
25.
is 26,000. But we will get a deduction of only 25,000.
25,000.
Very good, student. Good, good. Next, donation to public charitable institution registered under 80G, 50,000 was paid by check. Now, this is going to fall under which section, students? It is already given, but you all tell me under which
80G.
section it's going to fall.
80G, ma'am.
Very good. Very good. LIC pension fund. LIC pension fund. Under which section, students?
Ma'am, 80CCC.
80C.
80
80CCC.
C. Very good,
80
students.
triple C, ma'am.
Next, donation to National Children's Fund. 25,000 by way of check. When it is donation,
80G,
under
ma'am.
which section it is going to? Very good. Donation to Jawaharlal Nehru Memorial Fund. 25,000 by check. So to which section is this going to fall?
80G category 2, ma'am.
To which section is this going to fall?
80G.
80G. Next, donation to approved institution for promotion of family planning by check. For under which section is going to fall?
80G.
Ma'am, 80G.
Okay. Next,
Category 3, ma'am.
categories I'll ask you shortly. Deposit in PPF. Under which section you are going to get a deduction for
80C, ma'am.
depositing in public provident? Huh?
80C.
So very good, students. You all now are able to bifurcate that deduction is allowed under which section. Now let us see whether you all can bifurcate under category 1, 2, 3, 4 of 80G. Okay. When it is charitable institution, okay, which category it is going to fall?
Ma'am, category 1.
Category 4th.
Category 4, ma'am.
Category 4, because category 4 is 50% deduction with qualifying limit. Because category 4 we saw there was charitable institutions, there was minority community, housing accommodation, gurudwara, mosque and temples. Very good. Next, donation to National Children's Fund.
Category 1, ma'am.
Very good.
One category.
What is one category? 100% deduction you're going to get without any limit. Very good, students. Next, donation to Jawaharlal Nehru. Nehru's family, which category?
Category 2, ma'am.
Ma'am, category 2.
Category 2 without any
50%
50% deduction without any limit. Very good. Next, family planning, which category?
Category 3.
Very good. Category 3, but subject to qualifying limit. That is 100% deduction subject to qualifying limit. Now, what we need to do is, they are telling us to compute the total income of Mr. Shiva. So let us start, students. You all have already answered all the questions. We have to just put it in the format. So computation of total income of Mr. Shiva for assessment year 2020-2021. Gross total income. Gross total income is already given 7,75,000. So as it is, we are taken it. Less deduction. So deductions we will start from section 80C. So you all told me deposit in PPF is falling under section 80C. So we have taken 1 lakh as it is. Life insurance premium paid for insurance of major daughter. So we have to take only 10% of assured value or premium paid, whichever is lower. So we have taken 18,000. So total deduction under section 80C is coming to 1,18,000. Next, deduction under section 80CCC, we saw payment towards LIC pension fund, he will get a 60% deduction. So when we take the total of section 80C and 80CCC, we are getting 1,78,000. But what does section 80CCE tells us? That the total deduction under section 80C, 80CCC, 80CCD should not exceed 1,50,000. So the deduction available is only 1,50,000. Next, deduction under section 80D, we saw in the sum that medical insurance was paid in respect of self and spouse. So when we added the total, it came to 26,000. But he will not get a deduction of 26,000 because deduction is restricted to only 25,000. Next, deduction under section 80G, we saw there were four different donations. So for that, we need to do a working note. So let us see the working note. Okay. National Children's Fund is going to come under the first category where he has contributed 25,000 and he's going to get 100% deduction without seeing any limit. So 100% of 25,000 is 25,000. Okay. Next category was Jawaharlal Nehru Memorial Fund, where he is going to get 50% of the amount that he's contributed. So he had donated 25,000, but he will not get a complete deduction of 25,000. He is going to get only 50% of 25,000 without seeing any limit. So he got 50% of 25,000 is 12,500. Next, third category was family planning category, where he's going to get 100% deduction, but subject to qualifying limit. So for family planning, he has contributed 40,000, and the fourth category, public charitable trust, he has contributed 50,000, where he's going to get only 50% of the deduction subject to qualifying limit. So let us now calculate the qualifying limit. What did I tell you? What is qualifying limit? It is 10% of adjusted gross total income. What is adjusted gross total income? Gross total income. What is gross total income? 7,75,000 is the gross total income. From that, you're going to minus all the deductions from 80C to 80U, exception 80G. So in this particular problem, you have deduction under 80CCE, that is 1,50,000. You have minus that. You also have to minus deduction under section 80D, that is 25,000. So you have got 6 lakh as adjusted total income, students. See here, adjusted total income is nothing but gross total income minus amount of deduction under section 80C to 80U, except section 80G. So 6 lakh is coming in this case because from 7,75,000 you have minused the deduction under 80C, 80D, but you have to not minus under 80G. So 6 lakh is the adjusted gross total income. So you have to take 10% of that. So 10% of 6 lakh is how much? 60,000. Now pay attention. 60,000 is your limit. From your 60,000, first you have to give it off for the category 3. So from 60,000, can you give off 40,000? Yes, because 40,000 is less than 60,000. And deduction under category 3 is 100% and it is falling within the qualifying limit. So full 40,000 you can claim under category 3 because it is within the limit. So from 60,000, your 40,000 is already gone under category 3. So you're left with only 20,000 qualifying limit. But here in category 4, you have made a donation of 50,000. Now, 20,000 only is your limit left. So you can claim only 50% of 20,000. So 50% of 20,000 is how much? 10,000. So only 10,000 you can claim under section 80G. So the total of all these 4 categories is coming to 87,500. Therefore, the deduction under section 80G is 87,500. So how will you calculate the total income? Total income is nothing but the gross total income minus all these deductions. You will get the total income. Now, I've made a note, just let us see first. 60,000 being 10% of adjusted total income is the qualifying limit in this case. Firstly, donation of 40,000 to approved institution for family planning qualifying for 100% deduction subject to qualifying limit has been adjusted against this amount. Thereafter, donation to public charitable trust qualifying for 50% deduction subject to qualifying limit is adjusted. Hence, the contribution of 50,000 to public charitable trust is restricted to only 20,000, being 60,000 minus 40,000, 50% of which would be a deduction under Section 80G. Therefore, the deduction under Section 80G is subject to donation to public charitable trust would be 10,000, which is 50% of 20,000. So students, have you all understood Section 80G and have you all understood this particular problem?
Yes, ma'am.
Everyone has understood? Yes, students, or only one student has understood it?
Yes, ma'am. Understood.
Yes, ma'am, understood.
Okay. Okay. Next, let us move to the next section, that is Section 80G. Okay. Now, let us see who is the eligible SSE. Which SSE can get the deduction under Section 80G is an individual who is not in receipt of house rent allowance. Now, what is house rent allowance? We have already seen in a salary chapter. It is an allowance given by the employer to the employee in order to meet his house rent. So individual who's not getting the house rent allowance will be eligible to get the deduction under Section 80G. But for what this deduction is given? The deduction eligible payment should be rent paid for residential accommodation. So suppose if any individual who is not getting house rent allowance and he's paying rent for his residential accommodation, he will get a deduction under Section 80G. Now, what is the amount of deduction he will get? The amount of deduction is the least of the following. Least means minimum of the following. That is 25% of the total income, or rent paid minus 10% of total income, or 5,000 per month, whichever is less, is going to get a deduction under Section 80G if he is an individual who is not receiving HRA and he is paying rent on the residential accommodation. No deduction will be given if any residential accommodation is owned by the SSE, his spouse, minor children, HUF at the place where he ordinarily resides or performs the duties of his office or employment or carries on profession. So suppose I am working in Pune and I am paying rent in Pune for working in a company. So in Pune, I should not own any other residential house that belongs to me, my spouse, my children. Okay, if it belongs, then I am not eligible for the deduction under Section 80G. So did everyone understand Section 80G? Only you need to remember for whom it is applicable, when this deduction is given, and what is the amount of deduction. So students, have you understood 80G?
Yes, ma'am.
So it is given. Okay. Next, 80GGB. So remember 80GGB, this deduction is given only to an Indian company, not to an individual, not to an HUF. It is given only to an Indian company when he is making a contribution to the political parties. So suppose an Indian company is contributing to political parties, like any sum contributed by it to a registered political party or an electoral trust, then whatever amount he is contributing, he is going to get a deduction of the actual contribution, otherwise than by way of cash. So if he is contributing by the way of cash, he is not going to get a deduction. 80GGB deduction is given only to if an Indian company is contributing to a registered political party. Many a times donations have to be made by companies to the political parties. So if the contribution is made otherwise than by cash, then he the deduction will be the actual contribution that he is making. So did everyone understand ATGGB? If yes, we will move ahead.
Yes, ma'am.
Yes, students? Okay. Let us go to ATGGC. ATGGC is when any person, okay, other than local authority or artificial juridical person which is funded by government, so any person other than those persons that are funded by the government, if they are making contribution to political party. Now political party should be a registered political party or electoral trust, then they will get a deduction under section 80GGC, and the deduction will be the actual contribution otherwise than by the way of cash. So under 80GGB, it was only for an Indian company making contribution to registered political party, and 80GGC is any person, okay, other than those categories that are funded by the government. If they are making contribution to the registered political party, they will get the deduction of the actual contribution made. So did you all understand section 80GGC?
Yes, ma'am.
Okay, now let us move ahead to the next section, that is deduction in respect of certain incomes. Now when I say certain incomes, it means that the deduction is given when you are receiving some income by some source. Till now we saw deductions for payments that are made or contributions that are made, that donations that are made. But now we will be seeing deductions that you will get on certain income. Okay. So first section is section 80JJAA. Now, who's going to get this deduction? An SSC to whom section 44AB applies. Now 44AB, just remember who those category of people or those business classes to whom income tax audit is required. So whoever goes for an income tax of audit, they are covered under section 44AB. So an SSC to whom the tax audit is applicable, okay, whose gross total income includes profits and gains derived from business. Obviously business. So remember, this JJAA is applicable to only business houses who are, for whom tax audit is required. Okay. Now, what kind of income will be allowed as a deduction? So deduction in respect of employment of new employees. Suppose if a company who's running a business is employing new employees, he's going to get a deduction. Now what is the amount of deduction? 30% of additional employee cost incurred in the previous year. Whatever cost is incurred for employing new employees, 30% of that, whatever is incurred in the previous year, will be allowed as deduction. And this deduction is allowed for 3 assessment years, including the assessment year relevant to the previous year in which the employment is provided. So obviously, if in the previous year an employment is provided, for the next 3 assessment years, deduction will be given, that is 30% of additional employee cost incurred in employing the new employees. That is the deduction that will be given. So did everyone understand section 80JJAA? Remember, section 80JJAA is applicable only to those whom section 44AB applies. On the employment of new employees, 30% of additional employee cost will be allowed as a deduction for 3 assessment years. So did you all understand section 80JJAA, students?
Yes, ma'am.
Yes, students? Okay. Next is section 80QQB. Now, section 80QQB is given to a resident individual. You all know now who is a resident, who is a non-resident. Okay, you all are perfect with that now. So it is given only to a resident individual being an author. Now, who is an author? You know, who writes the books. Okay. So this deduction under section 80QQB is given to a resident individual who is an author. Okay. On what but the deduction is given? On the royalty income, etc. of authors of certain books other than textbooks. So if he is receiving the royalty income on the book that he has written, Okay, he other than textbooks, if he's getting that royalty income, he's going to get a deduction. Consideration for assignment or grant of any of his interest in the copyright of any book, being a work of literacy, artistic or scientific nature, or royalty or copyright fee received in lump sum or otherwise. So when you are an author of the book, you usually receive royalty income either in lump sum or in parts. So you're going to get a deduction under section 80 QQB. But what is the amount of deduction that you're going to get? It is income that is derived in the exercise of the profession what is doing, or 3 lakh, whichever is less. So remember, when he's an author of the book and he's getting royalty income, so the deduction will be whatever royalty income he's getting, or 3 lakh, whichever is less, he's going to get as a deduction. In respect of royalty or copyright fee received otherwise than by the way of lump sum, income to be restricted to 15% of the value of books sold during the relevant previous year. So this deduction if is receiving entire royalty income in lump sum. But suppose if he is receiving the royalty income in parts, then the deduction will be 15% of the value of the book sold during the relevant previous year. The income will be restricted to that much, deduction available will be that much. So did you all understand 80 QQB? Remember, 80 QQB applicable to an author who is receiving royalty income. Deduction is if he is receiving royalty income in lump sum, it will be income received or 3 lakh, whichever is less. And suppose if he is receiving in parts, that is otherwise than the way of lump sum, then income will be restricted to only 15% of value of books sold during the relevant previous year. So students, have you all understood section QQB?
Yes, ma'am.
Yes, students? Okay. Section 80 RRB. RRB is saying that here, instead of an individual being an author, here an individual has to be an patentee. Now, patents, you know that whenever you have a patent and you're releasing it, you get a royalty on the patents. So eligible income is royalty on patents, and any income by way of royalty on patents which is registered only after 2003, then only you will get deduction under section 80 RRB. What is the amount of deduction? Whole of such amount or 3 lakh, whichever is less. So students, 80 QQB is for an author, and the limit is whatever is the income or 3 lakh, whichever is less, and 80 RRB is for a patentee. Whatever income he's receiving or 3 lakh, whichever is less, is the amount of deduction he's going to get. So did you all understand section 80 RRB, students?
Yes, ma'am.
Yes,
Okay.
ma'am.
Now let us see deduction in respect of other income. Other income also, there are certain deductions that are given. Now, first section is section 80 TTA. Now, TTA is applicable to an individual or HUF other than resident senior citizen. Sorry, if you are an individual, but it is not applicable to senior citizens. Remember, if you're individual below the age of 60, or if you're HUF, you will get the deduction under section 80 TTA. But on what you will get the deduction? It is interest on deposit in saving account. Okay, so interest on deposit in saving account with the bank or a cooperative society or post office. Okay, if you're getting the interest, then that interest will be a deduction for you all. Okay, so the amount of deduction will be the actual interest subject to the maximum of 10,000. So suppose if I'm receiving interest from a bank, suppose 8,000 interest I am receiving from a bank from my savings account. So this 8,000 interest will come under income from other sources, plus I'm going to get a deduction under section 80 TTA. Now, since 8,000 is within the limit of 10,000, entire 8,000 will be exempt. Entire 8,000 I will get as a deduction. So my tax payable will be nil. So remember, interest on savings, you can get a maximum deduction of 10,000 rupees. So did everyone understand section TTA?
Yes,
Yes,
ma'am.
students? Okay, section TTB is same as section TTA, but section TTB is applicable to a senior citizen. Section TTA was applicable to a citizen, to a non-senior citizen, but section 80 TTB is applicable to a senior citizen when he's getting interest on deposits. Interest on deposits can be fixed deposits or savings account deposit, and the deduction will be actual interest of 50,000, whichever is less. Under section TTA, it was actual interest or 10,000, whichever is less, and here maximum is 50,000. So it is actual interest of 50,000, whichever is less. So for senior citizens, interest on savings and FD, you get a deduction of 50,000. Maximum limit is 50,000. So did everyone understand section 80 TTB?
Yes, ma'am.
Yes, students?
Yes, ma'am.
Okay. Next. Next, the last deduction is section 80U. Now, 80U is applicable only to an individual resident student. A resident who is an individual, it is applicable to only an individual resident. And now let us see what is the condition for availing this deduction. So deduction in case of a person with disability. And disability has to be certified by the medical authority. Okay, he just can't tell that he is disabled. It has to be certified by the medical authority. So remember, 80U is applicable to the individual SSC, and if he is suffering with disability, he will get the deduction under section 80U. Now, he is going to get a flat deduction of 75,000 in case a person with disability is going to get a deduction of 1,25,000. So suppose if Mr. X is earning income, but he is disabled. Okay, he is not able to perform his duties as normal person. Then he's going to get a deduction under section 80U, flat deduction of 75,000. If is a person just having disability, if it is severe disability, is going to get flat deduction of 1,25,000. So 80U, just remember, SSC or the SSC is nothing but an individual having disability can claim deduction under this section. So it is not that if his spouse is disabled, children is disabled, he will get deduction under this section. Only that person, that individual who is filing his income tax return and he is disabled, then that SSC, that individual only will get a deduction under section 80U. So students, have you all understood section 80U? Yes, students?
Yes, ma'am.
Yes.
Okay. So by this, we have seen a deduction under section 80G, 80GG, 80GGB, 80GGC, okay, 80JJA, 80QQB, RRB, TTA, TTB, and 80U. So before we conclude, let us quickly revise. 80G, it is whatever donation an SSC is making to any 4 categories. Okay, category number 1, 100% deduction without seeing any limit, where you have that Prime Minister's National Relief Fund, National Children Fund, okay, Defense Fund, etc. Second category is 50% deduction without qualifying limit, where you have Jawaharlal Nehru's family, that is Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Trust, Rajiv Gandhi, and you have Prime Minister's Daughter Relief Fund. Then you have 100% deduction with subject to qualifying limit, where you have only, you have to see 2 things, family planning and Indian Olympic, and you have 4th category 50% deduction with qualifying limit, where you have any donation made for charitable purposes, minority community, housing accommodation, Gurudwara, mosque, church, temple. Now, what is this qualifying limit? It is nothing but 10% of adjusted gross total income. Now, what is adjusted gross total income? Your gross total income reduced by the deductions from chapter 6A, that is from 80C to 80U, exception 80G, your short-term capital gains, long-term capital gains. Okay, so subject to that, whatever you're getting 10% of gross total income, first you have to set off that third category and then the balance in the fourth category. 80GG. What was 80GG? Rent paid for residential accommodation. This, any individual who is not getting the HRA and who is paying rent for residential accommodation, he can get a deduction under section 80GG. GG. Now 80GGB is when any Indian company is contributing to the political party, otherwise than the way of cash, he's going to get a deduction. 80GGC is any person other than local authority or artificial juridical person that is funded by the government, and if he's making contribution to a registered political party or electoral trust, he will get a deduction under section 80GGC. Next, 80JJ, sorry, this is AA. 80JJAA is any person who is subject to section 44AB, that is tax audit. He will get a deduction in respect of employment of new employees, and the deduction is 30% of the additional cost incurred. Next, 80QQB is a resident individual who is an author, and when he's getting the royalty income, on the royalty income that he's getting, he's going to get a deduction of the actual income received or 3 lakh, whichever is less, if it is received in lump sum, and if it is received other than lump sum, then 15% of the value of the book's income will be restricted to that much. Next, 80 RRB is royalty income on the patents received by an individual. Deduction will be the income or 3 lakh, whichever is less. 80 TTA, interest on deposit on saving account. This deduction is given only to an individual who is a non-senior citizen, and the deduction is subject to 10,000. 80 TTB is an deduction given on interest on saving to a senior citizen, okay, and the deduction is subject to rupees 50,000. And 80U is given to an individual who is disabled. If he's severely disabled, he will get a flat deduction of 1,25,000. If he's just disabled, he's going to get a flat deduction of 75,000. But he has to prove his disability by getting a certificate from medical authority. So these were all the deductions under section 80C to section 80U. So students, have you all understood these deductions?
Yes, ma'am.
Yes.
Okay. So thank you so much, students.